Well, good morning, everyone. I've just had the thumbs up from David. I think I've just blasted his eardrums as well with my dulcet tones. Welcome to this morning's webinar. It's great to have you join us. And first of all, an apology. There's been, sorry? As always. As always. There's been all sorts of interesting things going on with GoToWebinar, and that's also coincided with some stuff that's been going on in our own lives. David actually hasn't been very well with a really nasty bout of flu, and we've had a property move. We had to sort out one of our properties at the same time, and as I said, not helped by GoToWebinar, which is why things have been a little bit erratic over the last couple of weeks. However, everything's back to normal. We are back. The full schedule is resuming next week. So please do keep an eye out for your emails, and hopefully GoToWebinar will have settled down. There's some sort of new dashboard, and I haven't got to grips with it yet. Anyway, thank you for being so patient. Thank you for your patience with all this going on in the background. It's great to be back. But before we start, as usual, may I refer you to the disclaimer that I know you can see on the screen. As you know, this can be a very risky business, so please don't even think of using money that you cannot afford to lose. And before we carry on, let me just pass over to David.
Thank you, darling, and a very warm welcome to you wherever you are in the world. Great to have you along with us today. And as Anna said, just to apologise for the probably various messages you've been getting on your emails with regards to the webinars. It was a combination of my not being well and having to move one of our tenants was moving into one of our properties. So apologies for that. If this is the first time you've come along, a very warm welcome. I know we've got some regulars in the room as well, I can see on the dashboard. If you do have any questions, please just drop them in the chat box. We're more than happy to answer them there for you. If they're short questions, if you've got longer questions, we will do our best to answer them on air for you. The focus is Forex. The platforms we focus on here pretty much is are you on MT or you're MT5, either MT4 or MT5. But I also have the NinjaTrader platform running on my side as well, and we flip-flop between the two. And if you've not come across the MT5 platform, it really is a step up from MT4. It's got the same look and feel, but you get a broader array of timeframes, and you get a true multi-asset platform where you have access to indices, commodities, stocks, and of course cryptocurrencies as well. So it really is the powerful brother or sister, if you will, to MT4. And of course, with the quantum indicators, you don't need another license. It's simply that once you invest in a single indicator or the group of indicators, the pack of indicators, you can use them on MT4 or MT5 at any time. There's no additional license required. You can flip-flop at any time. You have the quantum trading dashboard. It's you who choose, and when you make that decision, it's entirely up to you, and you just select which platform it is that you want to run on, and when to upgrade from one to the other and back and forth. I'll pass back to Anna, and we will get going.
Just want to say as well about MT4 and MT5, the nice thing about the platforms is you can run multiple versions on your computer. We call it sort of the bucket system, and there is a link on the quantum trading site which shows you how you can set it up. And what it means, it doesn't sort of overrun the capacity on your computer, and that's really good because if you want to have lots and lots of charts up, and rather than put them all onto one version of the platform, it'll really take up a lot of computer space and slow things down. So anyway, all that information is on the quantumtrading.com site if you want to know a little bit more about the technical side of the MT4, MT5 platforms. Okay, let's just start. I've got the pound yen up at the moment, and there's a reason for that because it's one of my positions in a sort of eclectic group of trades that I'm in at the moment. I opened the positions a couple of days ago, and my basket of trades that I have I have them, I put them on, and I tend to keep them on for a few days. I'm not sure whether I'm going to keep them over the week, this weekend. I know I said in an earlier webinar that, you know, keeping positions overnight, it's not something I usually do. I must admit I have done so, sometimes by accident, simply because by the time I got back to my PC on Friday night, the market had closed. So I was quite lucky because the news overnight, over the weekend, actually was in my favour, and it brings me to what we want to sort of cover in this session, as well as obviously looking at the charts, looking at volume price analysis, how you would apply it to the charts, and obviously the quantum indicators as well. And it picks up on we did a webinar a few days ago to, I think it was about 200, was it 200 traders? Yes, it was an event that went on in Los Angeles, and we were asked to present, and we were asked to present really, it was an interesting presentation for us, because it was a little bit of history of how we started, why VPA, what was it special, or what was the special about volume price analysis, what was the difference between volume price analysis and volume spread analysis, because a lot of people get confused about that. That was so we clarified that, and how we then moved into not only developing the indicators, but also looking at the Forex market through what we call a prism of 3 dimensions, and that's the technical, the fundamental, and also what's happening in related markets. This is obviously from the book, the 3D book, which I know some of you may have read and have got, and if not, it's up on Amazon, and I'll show you the link. I'll bring up the link later on. But what it actually was about sentiment, and also how in this market, not only do you have to look at sentiment from the perspective of whether the market is buying or selling a particular currency, and whether that buying of selling of that currency is then reflected in all the pairs for that, in what we call the complex of that currency. But there's also sentiment based on fundamentals, political. Obviously, I mean, I've got the pound yen. You've got the ever ongoing saga with Brexit, and you've also got sentiment in terms of how the individual currencies and currency pairs reflect market sentiment. So this morning, for example, with the pound yen, because it's being driven on 2 aspects. First of all, we've got the, maybe the market is picking up the shambles that is going on in Parliament, so it's decided to sell the British pound. But because it has the yen in this particular pair, it's also reflecting the fact that there was a bit of a sell-off on Wall Street yesterday. Sentiment has come over from, which carried over into Asia, and that means markets are not in a very happy or good mood, and that's always reflected by the yen. So as we said in the presentation, after the US dollar, the second most important currency in this market is the Japanese yen. So you have to know where what the yen is doing, because it will, at the moment, and it doesn't look as though things are going to change anytime soon, if the yen is being bought, we know markets are in a risk off, and if it's being sold heavily, then it's risk on. In other words, riskier assets such as commodities and equities will be bought. So sentiment, how do you then apply that both as a short-term trader and perhaps on a longer, medium or longer term basis? Well, certainly on a scalping or a short-term basis, this is where we have to try and keep track of what the individual currencies are doing. And this was the question we also answered at the presentation: is why did we develop the indicators that we did? And it was really as a means of untangling this complex market, because it is complex in the sense that it has all these drivers. You've got fundamental drivers, political drivers, market sentiment drivers, and oh, by the way, and if that weren't enough, you also have to remember, that the institutional banks in this market are actually driving the prices to specific levels that they are looking to buy and sell in order to fulfill their requirements in terms of their clients. So you get mergers and acquisitions. Banks are then responsible for buying and selling huge blocks of currencies, and this is where things like order boards come in. So not only do you have this market reflecting sentiment in all its various forms, it is actually a very practical market. It's the money market. It's the market where money flows from one asset to another, where the banks are also in there, not only being market makers, but also fulfilling their duties to their clients. If they've struck a deal with a client that they're going to buy the pound against the yen at a particular exchange rate, well, they're going to make it worth their while to drive that exchange rate to a certain level, so that they can make their own, not only their commission, but they can make money on the movements in the market as well. So with all this complexity, we wanted a means of a graphical way, of a simple and easy, quick way of being able to spot instantly what is happening when we turn on our computers. And this was, if you like, the birth of the currency strength indicator. The currency strength indicator is, yes, strength and weakness, overbought, oversold, that's true, but it's so much more than that. It is a graphical representation of what is going on in the markets in a particular time frame at a particular moment, so that you as a trader, whether you are completely speculative, and that is you're just looking for a trading opportunity, and I've actually got the 30-minute CSI at the moment, and what it's actually telling me, well, what I can see here, I can see the yen moving up strongly. I can see the pound moving down strongly, which is good for me because I'm in the pound yen at the moment. But I can also see the dollar is being bought. The Swiss franc is being sold. Now so those two lines are moving. I've got the euro down here. I immediately have a picture in my mind, not only of what is happening in real time now as we speak, but also what is the market mood, what is the sentiment in the market. And with this market also being a market of mean reversion, it is the purest market of mean reversion. There is no bias in this market. It's not like stocks. When people move into the stock market, they have a bias to the long side, which is why you see, when you see those photos of traders with hands in their heads when markets are not doing very well. They're going to be stock traders. They don't want things to go down. They're not going to be short the market. As a forex trader, you have the luxury, right? You have the luxury of being able to go long and short. And the great thing about the market is you have this constant oscillations of going from overbought to oversold, overbought to oversold, and back again. And that is what we are looking to exploit. Whether you are looking to exploit that speculatively, so you open your computer and say, okay, what's moving today? What's the fundamental news? What's likely to move? That's what I'm thinking I'm going to, that's what I'm looking to get into. Or maybe you have a small portfolio of pairs that you like to trade. It tells you instantly what's happening to those currencies and currency pairs, and is there likely to be an opportunity in the pairs that you follow and track. There was all sorts of other things we covered in the presentation. We kind of covered about crossover sessions, the importance that sentiment is not universal in the 24-hour market. It can change. It changes as those of you who trade the London session will know. Then we come to New York. We explained about the London fix. I mean, there was so much in there. It was very gratifying to the feedback that much of what we said was actually totally new to them, wasn't it, David? It wasn't, which was very sweet. But without this kind of information and knowledge, you can trade. Don't get me wrong. You can open your computer. You can find a chart. You can look at you can put some indicators on, and you can say, yeah, whatever tactic you can use, and you can. You can make money. I can't deny that. But this market is much more than just a straight up down bet. And if it was that easy, it was just an up down bet, we wouldn't have brokers in their advertisements, saying what percentage of their traders actually are in loss at any given time. Anyway, I'm going to stop there for a minute because I'm going to come back to the pound yen in a little bit more detail, just to go through why I decided to. I'm actually short this the pound yen at the moment. I'm just going to pass over to David because he's actually looking. What have you got on your charts, David, at the moment?
Well, I've got pound Aussie up as well.
Yeah, he's got the pound Aussie on. As I said, this for me is not a scalp. It's something that, as I said, the decision I've got to make is whether I'm going to hold it over the weekend. I'm in profit at the moment. I'm not sure because it's Friday. If I was profit, I'd be looking to scale into this position. I'll see. We'll see what happens in the rest of the session. I'll just pass over to you. Do you want the screen as well?
No,
okay.
Thanks for your question, Keith, on option expirers. I'll get Anna to answer that one about where to find them. And yes, you're right. They are more difficult to find. Used to be on Forex Live, and I think they are on Forex Flow from time to time. So it's a little bit more tricky. And yes, I think they are charging now. But I'll get Anna to answer that one for you as well. Yeah, I'll just pass back to Anna so she can answer that one for you. Hold on.
All right. I get Talking Forex. I actually subscribe to it, but I understand that the feed is actually, some brokers actually offer it. Talking Forex.
Oh, Talking Forex, yeah.
Yes, I think some brokers actually offer it, and this is where you'll get them. In fact, these are the option expiries for today. I'm looking down the list of any of my I've got a position in the dollar Canadian, so I'll be looking at these levels and also the value of the contracts. And for those of you who are not familiar with the option expiries, these happen every day, and the way they're contracts between the banks themselves. I don't know what type of, whether it's who's going to be the winner and who's going to be the loser, but you can bet your bottom dollar, excuse the pun, one of them will be the winner, one will be the loser. But what's important for us as traders is it highlights important levels on the chart for the different pairs, so that come the what's called the New York cut, which I think is 3 o'clock London, 3 o'clock our time. If the price is anywhere near this level here, let's take the euro dollar 1.12. If it's anywhere near there, you will more than likely see a lot of volatility, and it's just something you have to be aware of. And how you interpret the values is essentially, for something like euro dollar, which is a big part of the forex market, you really want to be looking at numbers over the 1 billion. So anything you've got a billion, you've got 1.3 billion. You've got 1.1. You can see all the different levels where these contracts are sitting, as it were. Euro pound is also quite interesting because it's a smaller percentage of the market. But when you see a level, you've got 87.50 and you've got 1.3 billion riding on that. It could be a touch, it could be a no touch, it could be a double touch. We don't know the terms of reference of the option expiry. What's interesting is if you're in euro pound, or you're thinking of trading euro pound, and it's trading around 87.50, and you know this is riding, it's $1.3 billion worth of contracts riding on this level, that's going to be very significant. The cable, a billion there. Anything at 370, probably not terribly important. It's not going to be a level that's going to be worth defending, if you like, by whichever two banks are involved in that contract. You've got Aussie dollar, you've got 1.3 billion. That's a lot. That's a lot for the Aussie dollar. So you have to interpret this, and this is very significant. New Zealand dollar, you've got 2.5 billion. These are big numbers. They're huge numbers. They're GDP of a small country. Aussie yen, 780, yeah. So you have to look at the levels, you have to look at the values of the contracts, but you also have to put them read them in context, and they're relative to, if you like, the size of the pair in the market. So dollar CAD here, what have I got? For me, I've got 1.32. I'll go and have a look at the chart later on. And often what you'll see as well is if the market is anywhere close to that, coming up to the cut, often the pair will take a run at it, if you like, maybe stall, maybe come back. And once the cut is over, they all expire until the next time, and then the price action will carry on in its own sweet way. And dollar yen, you've got 2.6 billion. That's a lot. So really, if you've got a broker that can offer talking forex, then that's when you will get it. Okay, that's it. Is that all right?
Yeah,
fine. Right. What do you want to say? Shall I move over to you, or
can do? Yeah, can
do. To you. Okay. Have you answered everyone else as well?
Just switching screens, and hopefully you can see my NinjaTrader screen coming up any second now. Is that? Yeah, good to go. I've just got the, hopefully you can hear me loud and clear. I've just got the pound Aussie up, as I mentioned earlier on. And that's one of Anna's as well. Anna's actually got a basket running. I think there's pound Aussie, short pound Aussie, pound yen. I think the long dollar CAD. I think there's the short euro dollar, can't remember now. And a couple of others. It's a basket. And last time, look, this morning, just before we came on air, about 120 odd pips up overall, something like that. The reason I just wanted to highlight this is that one of the things that we focused on last week when we did this presentation was really, when you're trading in the Forex world, we focused on the dashboard and the steps that you follow in order to try and understand and isolate what is going on in terms of the pair that you're trading or considering trading. And it's always a process of disassembly and reassembly. The CSI disassembles into the base currencies, which is always the starting point. So that gives you the heads up of where you're seeing strength or weakness, reversals, overbought, oversold, currency pairs which are maybe not of interest because the two currencies are moving in the same direction, etc., etc. But once you've focused in on particularly a currency, for example, we're looking at the pound, particularly here on the pound yen and the pound Aussie, then the next step is you move to the matrix, because what you're trying to establish is several things. First of all, is sentiment across the complex universal to the pound? In other words, it is all the market selling the pound or buying the pound. And secondly, the best opportunity within that scenario, because it doesn't necessarily equate to all those pairs being of equal low risk, medium risk. Some will be higher risk, some will be lower risk. And it's a question of teasing out the best opportunity. But furthermore, in addition to that, to try and then understand from the pair you're looking at, if you're looking at the pound Aussie, for example, is the pound driving this sentiment universally and the Aussie really isn't contributing very much? Or is it a question of that currency pair is being driven on both sides? Because those are the pairs which will deliver the strongest trend, because you've got strength on both sides. You've got strength on one side, counterbalanced and driving with equal force in the opposite direction by weakness. From there, you then step over to the currency array, and there you're looking at the strength of trend visually. And again, you're teasing apart to find out where the best opportunities are and whether that sentiment is universal, and more particularly on the currency array, when those pairs are getting into overbought and oversold conditions. And finally, of course, to the heat map, where you see all that reflected on one single chart. You will see that sentiment rippling through from the faster time frames through to the slower time frames. And in addition to that, you've then got the ranking ladder on the left, whereby all of that is then weighted by the time frames, which gives you a slower perspective on whether you want to consider pairs at extremes or whether you're looking at pairs which are perhaps moving up and down the ranking ladder in a slightly more considered way, because that weighting has an effect on the time of movement of those pairs up and down the ranking ladder. The reason I just wanted to highlight this was really just to highlight, to show you on the daily chart. I've just popped that up full size. And it really just highlights, first of all, what volume price analysis reveals to you. And secondly, that it's also applies across the timeframes. Whether you're focused on the out and out scalping trader, we focus a lot on the shorter, faster timeframes only because it just means there's more happening. It doesn't mean per se that we believe scalping is the only way to trade this market. It isn't. It just helps in terms of the education and what we're showing. But what I wanted to show you was this. This is just a really nice example of an anomaly in terms of price action, and it's to do with this candle here. This was a strong move on the day. We had a very strong move higher, no wicks to the top and bottom to mention, and you look at the volume. Now, when you look across this chart at what's gone on over here, and this is all comparative because we're just comparing days with days, so there's no issues of different sessions. Yes, you've got a bit of holiday in here, you know, down in, where are we, December? Here we are, December. This is the turn of the year here. So, you know, in here, you've got bits of holiday periods and what have you. But other than that, you can be assured you're comparing light with light. So when you look at the volume in here and you start to look across, you scan across, you're looking for an equivalent price candle and you're looking for equivalent volume. Well, this volume here looks suspiciously low. This is way out of whack in terms of what you would expect to see for such a dramatic move, given the amount of volume that has gone on. You can pick any of these candles you like, actually. I mean, that's a similar sort of volume profile there. And look at the price action. It's not quite half, but let's say it's, I don't know, not quite 2/3, something like that. I don't know. But it just jumps off the page at you. And when you see moves like that, it doesn't mean that the market is necessarily going to roll over the following day. But what it does mean is that this is suspicious. The big operators, the market makers, are not particularly participating in this move. This has been a rapid move. To be honest, I can't remember what it was. Probably some sort of Brexit thing. Goodness knows there's enough of them come and go every day that you know, enough to feed a family of 4 off quite happily for the rest of their time in terms of market making. But in terms of the daily candle, you know, very little, very, very suspicious move. And we've seen it so many times on the pound yen, it's ridiculous. You see these very rapid moves, very light volume, and as Anna always uses the analogy of the souffle, the market rallies quickly and then promptly reverses thereafter. And this is what we've seen here. And this, say, that reinforced the point, this is the daily. We've seen the climb. Yeah, we had a doji candle, indecision. Then we get up to the top. The volume is falling away. It's getting even weaker. So what is that telling you as a longer term perspective on this? Is this strength or is this weakness? Well, clearly it's signaling some sort of weakness, simply because we've got some falling volume. We've got an anomaly here. The price action itself isn't looking terribly strong anyway. It's tried to rally on pretty weedy volume and fallen back to pretty much near the close. And then we get the rollover. Now we're trading back down the volume point of control. What do we expect to see? We had decent volume yesterday under this candle. Again, not huge wicks to the top and bottom, so that's fine. But for the time being, for a longer term perspective, you know, if you were holding this for, I don't know, days or weeks, then your expectation would be that we would expect to see the pair oscillate around the volume point of control for the time being. But I just wanted to highlight that because it's an interesting facet of volume price analysis, which really just highlights the fact that this doesn't just apply to the 1 minute, the 5 minutes, and all the rest of it. You will see these anomalies in all time frames. In terms of what's going on at the moment, again, it's the power of multiple time frame analysis. You know, we're down at the VPOC on 5. Yeah, we've had you know, a little bit of some very minor buying here coming in, but we're trading around the volume point of control. We've actually a ton of volume around the volume point of control on the histogram here. Got a pivot low coming here, but again, we've got the yellow dashed line is the fulcrum of the market. It's the point at which, as you can see, we've got the heaviest concentration, which is way out over here. So in terms of an intraday perspective, if you were trading this as a scalping trader for the time being, then you've got to be patient and wait, because all the signals are telling you right now that we're expecting to see some congestion building around these sorts of levels on an intraday basis. If we go out to the 15, let's just see where the volume point of control is on that one. It's at a much lower level. We've had a lot of volatility this morning, no great surprise given what's going on in Brexit if you're trading the pound. So I just wanted to highlight that, and it's just a really nice example of the slower time-based perspectives. And even if you're an intraday trader, I would urge you to look at the daily charts and just watch out for these anomalies. Look out for the buying, look out for the selling, look out for the accumulation, distribution, everything else, but look out for those anomalies where price action is clearly out of balance. And what will have happened on a day like that is the fear of missing out. Longer term traders will have seen that rocket, and now they're trapped in a weak position. I'm just going to pass back to Anna at that point.
And just a quick reminder about the British pound is we've actually got, is it retail sales at 9:30 as well. So as a trader, as a short-term trader, the fundamental news, or certainly tier one fundamental news, it's a decision you have to take whether you are actually going to try and whether you're going to even open a position before a release. As I said, either PMIs, whatever the release happens to be. The good news about this market is that the releases come along with a monotonous regularity. We know when they're going to be released, so you can make a decision. And another, highlights again that this is not simply. It is a 24-hour market, but liquidity does vary. Participation does vary between the different time zones, and of course, the market is going to be hit. The currencies and currency pairs are going to be hit by, as I said, the fundamental news. What this profile also shows is another aspect that you have to try and get to grips with, is that I've been looking. My decision to go short this market was based on what I've been looking at on the longer term timeframes, and in particular the daily chart here. And really it was this, I wouldn't say it was one candle, but it was just over the overall look and feel of the volume profile, the candles that we see here, lots of very narrow spread candles with a reasonable amount of volume going in. If you look at the volume that was under these little tiny candles here, and you look at the volume maybe on these candles on the way up, the spread of the candles, there was a lot of anomalies going on. I've also got the VPOC here, the volume point of control, which also is, it's another way of looking at support and resistance, but with volume. So looking at that, looking at the CSI, I also looked at the, where is it, is the heat map. The heat map is an extraordinary indicator. It was the last of the indicators that we developed for in the currency dashboard. And where is the position? It was 19. In fact, it was slightly higher when I looked at it. And it's a great indicator for these big reversals, if you like. The Euro New Zealand is a classic one. It's right at the bottom at the moment, but actually I'll have to go back and look at some of my posts on Facebook, but I was looking at the Euro New Zealand when it was right up at number one. Do you remember, David? Yeah. We were waiting for it to roll over, and it has had an extraordinary rollover, helped also earlier on this week by the New Zealand suddenly putting on a huge spurt. I have to say it was all a bit overdone, because Governor Orr didn't actually say anything that, in my opinion, that would justify the kind of strong move in the New Zealand. But hey, who are we? We're just humble traders, and we just have to play it as we see it. But what I really wanted to say here is, so this is why I'm short this market, and this is. David doesn't use moving averages. I do put a moving average on, and it's a 200, but it's not a simple, it's not an exponential. It is, in fact, let's have a look at indicator list here. It's this one, It's the easier if I choose. It's the fractal adaptive moving average, which sounds absolutely fantastic, doesn't it? And the reason I've been testing it, and it's held remarkably well on the chart. And in fact, some of our users and students have picked up on it, and I know I've had some very positive feedback in the use of this particular moving average. I stumbled across it on MT5, and then I looked up a little bit more background on it, and it's actually been tested, particularly with the euro dollar, and of all the moving 200s, it was found to be, it worked more than others. And again, with moving averages, people quote them in posts and what have you, but then I'm never really sure whether it's simple, exponential, or weighted, or whatever it is. Anyway, it's a fractal. This is what it is, and it's actually, I apply it to the close. You've got options to whatever it is, but I just apply it to the close. Anyway, so there it is. Who am I to argue with the markets and the power of the 200? So that tells me that, Brexit notwithstanding, is this looking bearish, and I've got this additional protection from the VPOC. What these levels also tell you is where your stop loss, where's the best place to put your stop loss. Your stop loss is, you should always choose an area that is highlighted by the market. What this also tells me, and this is something you have to think very carefully of, is a lot of traders like to use a fixed ratio. So you say, well, okay, this is what you've seen. This is where your stop loss is. So that's your risk. So what is going to be your reward? Are you going to be 2 to 1, 3 to 1, 4 to 1? And you will have heard David get on his soapbox about fixed ratios and using fixed ratios to set your trade up. And he has very strong views. I have strong views as well, and the reason we have strong views is this: the market doesn't care about your 2 to 1, 3 to 1, 4 to 1. And it's also this: if you are going to go into 2 to 1, 3 to 1, what you're doing is just placing a bet. It's like a binary. You know what your risk is, and I'm only going to take double or 3 times that. And that actually is against, if you like, the whole premise of trading, and that is that you are to keep your losers very small, but you'll allow your winners to go and keep going as long as possible. And you only have to look at charts to see where, if you do the 2 to 1, 3 to 1, you potentially are closing yourself off to very, very, big moves, as it were. I can understand why traders like to do it. I can understand it kind of, it's like a bit of a comfort. It's like saying, no, I'm only going to be happy with this. I know what my risk is, and I know this is what I'm projecting to be my reward. But if you understand your charts, and you understand the price cycle, and you understand support and resistance, and you use volume price analysis, the charts will tell you what is the what is the potential for this trade. It's something we cover in detail in the Forex trading program. It does mean you have to to have a different mindset when you approach trading and trading this market. And can I also say, if you were looking to invest in a stock, would you use a fixed risk and reward? Well, no, because the whole premise of a stock, and I know I said this isn't like the stock market, but think of the mindset. If you're in, if you're looking to buy a stock, you say, well, I'm going to buy this stock, and as long as it doubles, then it goes up 10 or 10, then I'm happy, I'm coming out. Well, fine, then all you'll have is lots and lots of little winners. And what it also, the danger of that is, as people, we have a horrible habit of taking small winners but allowing losses to build up, because the emotion that is prevalent when we are in a loss is hope. We hope things are going to turn around. And that, I believe, partly comes from this thing of, of wanting to, if you like, just take a little bit. I'll be happy with a little bit out of it. Yes, you will be, but there will also come a point when you perhaps get yourself into a position. It will go against you, assuming you've still got enough money in your account, and you will sit there and you will hope that it will turn against you. I've also got something else to say about FOMO, but I'll save that for later. Now, the other thing I was going to say about this setup of charts is I've got the Renko here. I've got the 3 minute, I've got the 2 hour, and I've got the daily chart. That's my rationale for going in on short on, because I'm not scalping, I'm going to be in for a little bit of time. But it also highlights that as a scalping trader, if you were down at the right close up to the market, you can be, there will be an argument saying, okay, that may be overall bearish on a longer term time frame, but actually, are there going to be opportunities to take a trade to the long side? There may or may not be, but it's being aware and keeping to the time frames that, first of all, that you want to trade, and secondly, as we always say, you can have two traders. We'll look at a set of charts. One will be long, one will be short, and both will be able to make money. Now, at the moment on the pound yen, it's not quite so clear cut as the pound Aussie, is it, David? There's more the weight of the slower term charts are actually sort of weighing quite heavily on pound yen, but it's partly. And it's not going anywhere at the moment because we've got retail sales coming up. So for me, retail sales is just something I'm going to have to absorb. It's, it could be of benefit to me. It may not be of benefit. As a short-term trader, the decision you've got to weigh is say, well, it's going sideways. There's a piece of news coming up. Maybe I'll just wait. Or you look at a chart and you think, well, yeah, I'm going to take a view, and maybe I'll put a market order, a limit order, or something like that. Is there anything you want to add to that, David?
No.
Have you got questions or something?
Yeah, just.
Do you want to answer them?
Yeah.
Okay, I'll turn myself off.
Thanks, darling. Hopefully you can hear me okay. I can't hear myself in my headset, which is a bit annoying, but never mind. I'm sure you can hear me okay. Alex, I've answered your question in the chat box, but yes, basically with the volume point of control, as I said, what we always try and do with all the indicators we develop is to provide an optimal setting, which is a balance of giving as much information as possible, but also counterbalancing that against the resources that are required to deliver that information by the PC. So it's always that balance. And we always have to be aware of that, because as you can appreciate, with all these indicators, they are extremely sophisticated. The algorithms are very sophisticated. There's a huge amount of complex calculation goes on behind the scenes, which you may not be, well, you certainly won't be aware of. But that is all going on in background processing. And as Anna mentioned at the start of the webinar, certainly for MT4 and MT5, one of the solutions, and it's a very elegant solution, which our development team came up with, is what we call the bucket solution, which is running multiple versions of the same platform and same account on your PC. But in doing it in this way, it optimizes the resources available. So it's a very, very clever way of giving you a huge amount of information, but also optimizing it in terms of PC resource. So that applies to all the indicators. I mean, you can go crazy with these things. You can go, hundreds of days, etc., etc. I'm sure, you're familiar with that. But yes, it will vary that. So we have to strike a balance somewhere and come up with what we believe is the optimal solution. So I hope this answers that one for you. Sandra, in terms of the, Anna's answered that one. It's a standard indicator that you can find on. It's not an MT4. Okay, it's only on MT5 to understand it. It's not one I'm familiar with, because Anna said I don't actually use them. I'm just going to switch off and hand back to Anna.
Yeah. As David said, it's what, on the pound Aussie? Yeah, and and that's the reason why we've got the retail sales here. Now looking at these numbers, this is what we also have to get to grips with, is an interpretation. We have to, we are trading other traders' reactions to the market, basically. So we have to kind of do two things. We have to try and in ourselves get to grips with, well, how is the market going to react to the number that's due to come out in 15 minutes, and then we have to try and figure out, well, how are other traders, how the market makers, what are they going to do? Well, we know what they do. They inject a huge amount of volatility into the market. Things go all over the place. Volatility, which is why we developed the volatility indicator that tells us immediately that volatility has come in. We know on the pound it's going to come in on the retail sales anyway, so we know that's going to appear in the sterling pairs. Some volatility, but it's not going to be consistent across the pairs. In some of the cross pairs, it's not quite as volatile as something like cable. Perhaps it's on euro pound. You'll certainly see it in the pound yen. But the interpretation of these numbers now on Forex Factory, you will get a graph of it, and you can see with this particular release, it's a bit unpredictable actually. It goes up, down, up, down. It can be it's a bit of a can of worms actually. But looking at the number, this is the previous. This is the retail sales have really gone down very heavily. That's minus 0.9. The market expectation is for 0.2. So it's a reasonable recovery. So what happened? What is going to happen if this comes in? Say it comes in worse than last time. Is that what's that going to do to the pound? Well, logically, that will tell you if it's going to come in. I don't know. It comes in at minus worse than minus 0.9. What's minus worse than minus 0.9, David George? Minus one or something, or minus 2 or what have you. Well, you think, yeah, okay. What you then have to bear in mind is occasionally what can sometimes happen, the pound will be bought because they say, well, actually, it's not quite as bad. There's always this sort of subtlety and nuance around it. That's against the previous. Then you look at the forecast as well. This is a positive number. If the number comes in absolutely, stonking, that, I don't know, it comes in at a hugely positive number, then yes, you would say it would go up. Yes, well, have you got something to say about that? So there are so many different interpretations that you have to be aware of. I'm not saying you have to understand them 150% and you think, well, how can I base my trading tactic around that? You just have to be aware that when this number is released, there are going to be different interpretations, and at the same time, there is going to be a huge excuse for trapping traders on the wrong side, and that always happens when you get an extreme reaction. I'm hoping I'm talking because I actually want to see the extreme reaction, because that actually tells me I can tell you the story about FOMO and why we are all hardwired. Our brains are hardwired with FOMO, why we're hardwired with it. Because once you understand it, you can then deal with it accordingly. I just pass over to David.
Thanks, darling. I just wanted to add my 2 penneth worth of that, and really it's this, that these are not normal times for the pound. It's self-evident, and if this were a normal fundamental release, then yes, it would carry considerable weight, and it would have an impact in the market, generally in a way that you might expect, because it will have a direct relationship to the longer term outlook for the economy, and also in terms of interest rates and everything else. These are not normal times, and therefore, when this news is released, the reaction in the market will almost certainly be tempered by the fact that there is a much bigger game in town of Brexit. And therefore, whether the news is stellar or awful or okay, the reaction is probably going to be pretty much the same, because Brexit rules everything right now. And the Brexit caravan is still in town, and will remain so for the time being, and therefore anything else is secondary. And it's something we explain in the Forex program, which is really to do with the cyclical nature of the importance of releases, because when economies are all over the floor, for example, right now the Eurozone is entering a phase, a recessionary phase. I think Germany escaped by the skin of its teeth, but that's what's going on in Europe at the moment. What is the prospect of interest rates in Europe right now? The answer is none. So when an interest rate decision comes around, it's a very little interest, excuse the pun. The only thing that will cause the market to move in those circumstances is the follow-up statement, which comes along 45 minutes later, and whether there is any commentary or any comment in there, or a word or phrase used which signals something of potential importance. Exactly the same scenario in the US. We've seen it was a classic situation, not only of the importance of the statement and the rowing back of what the Fed policy and the slowing down in rhetoric, but more importantly, how that was then reflected in terms of related markets, in terms of the reaction in US equity markets to that commentary. So it was just another example. But the point here is Brexit rules everything right now. And if you're trading the pound, to be honest, whatever news comes and goes, whatever fundamental news is on the daily schedule, it's generally speaking going to be secondary. So I just wanted to highlight the point because it is important. As I say, retail sales could be fantastic, wonderful, but is that really going to affect what is going on right now? Answer no, because there's a much bigger game in town. Let me pass back to Anna.
What I also did is just to show on here we have the 5-minute CSI, and we talk about lines being in overextension. This is, I said, on the 5. You've got the currency indicator here, highlighting potential mean reversion opportunities. But what they can also tell you is when there isn't an opportunity, and that's when they're moving in the same direction. And you've got here, it's telling you it's in congestion, where they will diverge, they will move apart, and you've got the magenta line, which is the Japanese yen, and you've got the pound here, which is this yellow line here, sort of very much stuck in the middle. And I'm looking at this because obviously it's in my interest to know what's going on in the pound yen. But if you were a sort of speculative trader and you're thinking, oh right, well I know there's news coming up. Well, what is going on? Because there's always something going on elsewhere. And what would you be looking at here? What can we see? Well, we can see the euros actually being bought quite nicely, and we've got the Swiss franc falling. So is there a potential opportunity there? You've got the New Zealand going rising. You've got, as I said, the Swiss franc is being sold off. Maybe the SMBs in there, selling away because they certainly don't want a strong Swiss franc. This is what this indicator does. This is why we developed it. We developed it because not only did we want to have a view of what our particular favorite currency pairs are doing, but also, what else is going on in the market. It's the first, as David said, it's the first stage in this disassembly of this complex market in a graphical in a graphical, easy to understand way. And then the next step is we can see the selling of the Swiss franc. What we want to then establish, we want confirmation whether the strength of that selling is in fact counterbalanced by the strength of buying in the euro. So if we were looking at, say, a sell of the Swiss franc, which would, what would be the best? Which of the pairs would give us the best option and for a trade? And then you've got to factor in also what the spread is from your broker, because sometimes what can happen is you can see a fantastic trade on a particular pair from the CSI and on the matrix, but actually when you, particularly on a short-term scalping basis, it's not going to be viable because the spread is too wide. There's not enough in there. You know, your charts were telling you that where is it? Because that's, the risk on that trade, if you like, it's not going to go far enough to be able to be worth your while. But if you are a slightly longer term trader, if this was, if this was the 4-hour chart or the 8-hour chart, then that's a different issue, because you're going to be in the trade much longer, and you can afford to swallow that spread, as it were. So that's what the CSI also tells you. On the MT5 platform, what you have also now is you have what's called a docking option, and what it is, that stays within the profile. It can't move out. But if you right click on one of the charts and hit the dock, what it means is you can just move it over onto the onto another screen, which is great, because it means you can have lots more charts open simultaneously for a particular pair. So we've got 4 minutes to go. I'm going to wait. You've got anything to say on that? Anything else? No. So if we can just wait patiently and see what happens, what's likely to happen on the release of the news, as David said, with the pound, obviously. Brexit does have it's really the only game in town at the moment. So we'll see if the retail sales, I mean, the excuse last time was because it was about fears of that they will use the Brexit argument to justify whether something is good or bad. So usually bad, actually. They said it was so awful, but that was because everyone's so worried about Brexit and they weren't spending any money. So we'll wait and see. But we can see here the things are beginning to move. I've got the Renko. This is set. This is the indicator that comes with the quantum trading. So we see the initial sort of bubbling away here, the initial reaction. We can see the congestion. We've got pivots to the top. I've got fractals here. This is the range. It's in a very, very tight range at the moment because it's simply waiting for this release. And it's also on the 3-minute chart, as we see here. If you've got the 1 minute, shall I move it to the? Okay, move it to the. Here we are. It's even better on the 1 minute. It's around the volume point of control. As you say, well, what can I do as a trader? Well, if you think about, if you got the time to do market orders, well, you can say look at the levels, and you can certainly put an order to the top and the bottom. The danger is if you're in a pair such as pound yen, which is very volatile, you can shoot yourself in both feet with that one, can't you, David? You get to both of it triggered and taken out at the same time. Personally, and this is just a personal suggestion, you're almost better off just waiting, see what happens. If you're in a trade already and you've got some profit, that's a different issue. If you opened a position earlier on in the trading session, that's a different decision you have to take. But trying to jump on this as the news is released is very, very tricky, if not impossible. So maybe wait for the as we call the fade, as it were. And as I said, once it is, I will tell you my FOMO my FOMO story. Right, do you want to talk through, David?
Yeah. I've got the 1 minute pound Aussie. Do you want to put it over here, or do you want to stay on yours? Don't mind. Okay, we're just going to switch over onto pound Aussie just for a bit of fun, see what's going on. The one thing I would, while we're doing that, the one thing I would, if you've not done this before, let's just pull my screen up. There we go. So I'm rabbiting on. The one thing I would urge you to do is, when you've got these news releases coming up, then move to a fast chart such as this. This is 1 minute now on pound Aussie, because you will get a reaction a few minutes ahead of the news. It's inevitable, and I would suggest, I'm not a conspiracy theorist, I'm just practical. Is it reasonable to think that someone somewhere on the planet within the financial institutional market base doesn't have some inside knowledge of what this number is going to be? The answer is no, it's not. So let's face it, this news is going to be out and about there somewhere in advance of what's going to happen before it's published. And you get these reactions prior to the release itself. Now, it's not actually, it's just coming up to 9:30, there we go, bang. And that's just an example of the traps that are set for traders. It was, it's falling away. Then you get this quite rapid move, the minute beforehand. And what's happened? Bang, gone completely the other way. That's what they do. This is market making. And if you were in that position, that's what you'd do as well, because it's just so easy to make money. What's interesting now is, as you can see, and it's the power of the volatility indicator, these little purple arrows top and bottom. This is the volatility indicator. It's triggered in real time. The candle hasn't closed off yet. It's telling you that the price action has moved outside the average true range. And therefore, we are in volatility territory, which is no great surprise because we've got a news release and the volatility candle is triggered. You've got the volume underneath, so we know the market makers are very active. This is a valid candle. We've got a little bit of selling to the upside, but we've got the volatility triggered. So our expectation, certainly from a 1 minute perspective right now, is to see the price action trade back inside of the spread of the candle, because the opposite of the coin is now that a lot of scalping traders will have jumped in on this. As Anna said, FOMO, fear of missing out, rapid move to the upside. It's all about speed of movement. When you see this as a trader, I can assure you, your gut reaction, your emotional response is jump in, don't want to miss out. This market's moving fast, it's shot up here. I can make some quick pips here, jump in, bang, now you're trapped. Maybe here for a little while. This is a 1 minute chart, so time's comparative. It may be 2, 3, 4, 5 minutes, who knows? But if you get these on a 5 minute chart, if this is replicated on 2, 3, and 4, then that's going to extend the phase of price action where we're going to see congestion. It's also reinforced by the fact that obviously the price action closed off the high of the session, so we're going to see an open here somewhere anyway. But in addition to that, we're also trading around the volume point of control on the 1 minute as well. This is the highest concentration of volume. And therefore, we've got two reinforcing signals, if you will. Now, what's interesting about the follow-on candle to the downside, this one here, look at the volume under it. It's not high. Look at the scan your eye across here. How are we doing in terms of heavy selling? Is it heavy selling? Not particularly. But we know we're trading around the volume point of control for the time being. So in terms of a scalping opportunity, we have to be patient. We've got to wait. I don't even know what the news was. What was the release anyway? I mean, it's hardly moved a great deal.
It's +1 versus 0.2. It's positive.
Yeah, it's positive, but it's that's it. It's
and there's a lot of revisions as well.
And there's always revisions to these numbers, but then by the time the revisions come along, it's ancient history, and no one's interested any longer. The market only reacts. The market has I was listening to something the other day, or someone said, I think is it the ostrich that has a brain span of 12 seconds in terms of time? Was it? I can't remember now. Anyway, one of our dear creatures on the planet has a very limited attention span of something like 12 seconds, and the market is a bit like that. It will react. That's it. Done and dusted. On to the next thing. But that's the power of the volatility indicator. If you're in a trade, you've got a decision to make. To be honest, if Anna and I have to say myself particularly, if I'm in a position and I've got positive in the bank and I see this triggered, then I'll tend to close out, because what's the worst that can happen? If it reverses, I'm right. If it doesn't reverse, well, so what? I just jump back in again. If you're in a negative situation, that's a harder decision to make. So, you just be aware of it. But, that's the power of the volatility indicator. It's triggered, lots of volume under it, market makers participating, selling coming in. We're looking for reversal. We're getting a reversal. It just saves you an awful lot of pain and grief. It's such a simple indicator, but boy, oh boy, it is so powerful, and it works in all time frames. Going back to what I was saying earlier about the daily chart, if you get a volatility on a daily, it's powerful because it's telling you, boy, oh boy, we've had an extreme move. Now, what are we expecting over the next few days? Well, probably some congestion and maybe even a full-blown reversal. So it works, and on Ninja, you can use it from seconds right the way through the whole gamut of time horizons. You've got volume falling away here. So we've got a move lower, and we've got volume falling away. So the selling pressure is falling, and a falling market. It's only 3 or 4 candles, but nevertheless, that's an anomaly because all things being equal, if this were going to go a long way, then you want to see a falling market. You want to see this rising, and vice versa for an up market. You want to see rising markets with rising volume, falling markets with rising volume also. You're not seeing it. So, the selling pressure is dying away. We're probably going to move back up onto the VPOC again. From a scalping trading perspective, if you were looking at this as an opportunity, either long or short, you've just got to be patient. You've got resistance over here. You've got the volume falling away down here. So if the market moves lower, then from an entry position, you might be looking to go below this candle, or you might be looking below this level somewhere once you get into this much thinner volume on the volume point of control. From a price resistance perspective, you've got 2 pretty solid levels up here. So from a scalping perspective in that direction, again, you've got thin volume and but you've got some strong price resistance. So, if you were looking at that, then you probably wait for it to clear this region, the top of that candle somewhere. Once it's through there, then maybe you look at that as an opportunity to take a long position in the market, something like that. I'm going to pass back to Anna because we've gone over time as usual.
And just to go back to the pound yen and to put it into perspective, this is the move that we've seen. I've actually got the 3-minute chart shot up, came back straight into the spread of the candle, and FOMO, FOMO. As I said, FOMO is hardwired, and we've run out of time, so I will explain all about that the next time and the psychology behind it, because, as I said, we have run out of time. But in the context of what I've seen in the daily chart, it's quite a narrow spread. Nothing, it's the little bit of price action that's going on in this little candle that we have here at the moment. So it does depend on your perspective and what you are looking to achieve in the time that you have available and the time frame that you want to trade. So that's what we've got to say. Again, these are the what did they say here? The retail sales. Oh, here we are. This is much more interesting about China and the US. What's happening in the trade deal over in China with the tariffs? Let's talk about the US placing quite onerous tariffs on Europe and their cars. That's sort of bubbling around in the background. That's certainly going to have an impact on what's happening in indices today again, and that will be reflected in your currency and currency pairs, particularly in the yen. So we will wait and see. Right, very, very quickly, the indicators that we talked about, they're here. All the details are at quantumtrading.com. Those of you may not have seen, we've revamped all the website, making it much easier to discover more about the indicators. As you can see here, we've also got some of the indicators, not all of them, available for trading view. All the prices are there. You can buy one indicator or you can buy the complete package. And the complete package, if you do buy the complete package, one of the best features of buying the package is that whenever we develop a new indicator, it is automatically added to your package for free. I know we have customers who bought 3 or 4 years ago, and they've benefited to the tune of maybe 6 or 7 extra indicators, but they've only ever paid one price for the package. And if you scroll down to the down the front page, and you just click, all the indicators come up individually, you just click on them. And what we've also done is we've put all the support pages and the videos explaining the indicators, why we developed them, suggested ways of being able to use them, all on the one page, which really does make the life an awful lot easier. And we've referenced the education program, as it comes up in a minute. Here we are. This is us. We're no longer at this particular property. Where someone else will take some new pictures and add them onto the site. And it's the 5 modules, what is available on the program. And the cost of the program, I've got to go right to the end here, and it does include all the full package of indicators. So the cost of the program is 1391 for MT4 and 5, or 1694 for NinjaTrader, because there are slightly more indicators for NinjaTrader, but it does include the complete suite of indicators, and you can spread the payments over 3 months. You can spread payments over 3 months, whether you buy one indicator, a package, or the education program. Anything you want to add to that, David? No?
And if you have some indicators, we offer a credit that you can upgrade it.
Yes, we get credit. So if you've bought something and you want to upgrade, you'll always get a credit. As I said, it's really, we are very, very flexible. More information on anything, Anna at annacooling.com or David at quantumtrading.com. So that's this. We are back. Please just keep an eye out for your emails for Tuesday. I think we're back on Tuesday. Yeah, there's going to be a much more regular schedule as of next week. So have a great trading day. I hope you have a great day on the markets. Let's see what's happening with the pound yen. Oh, it's a little bit desultory at the moment. It's trying to rise. Oh, well, we'll wait and see what happens. I mean, for a long position, basically, it's got to get beyond the high of this. It's got to come out of this volatility. It's got to come out of 141.37 if that is going to carry on higher. But it's not looking terribly happy at the moment, is it really? The Renko, which is why we use a non-time based chart. Here we are. Let's see what happens. That's changed. Yeah, we'll see. That's the level it's got to get over 141.34. We'll wait and see. But in the context of what's happening with regard to myself, it's in this very narrow phase of price action. We'll see what market sentiment is later on today. Thanks so much for coming along. We'll catch you next time. Take care. Oh, and have a great weekend.